So here it's saying here, so overnight session looking at ES futures trading. As we know that what has happened yesterday, there's been a huge short covering rally going on for last couple of days. Uh, I think it happened a day before. A lot of shorts has been trapped in the single print areas, so structure has been deteriorated. And then we saw the overnight session quite balanced. The market opened the following day, broke out both the overnight high and previous day, and then boom, the shorts has been keep covering their shorts, and we see panic buying happening in these areas. So single print uh, levels has been plotted. Now the plan for today is basically we got to see whether market opened. We have seen a spike in the power hour uh, right before the close. So this was the spike base. I think my level is incorrect. Spike base is here, 4678.50. Yeah. So what I got to see that if market opens below this level and start trading lower, I'm gonna short, and if market start going up, I'm not gonna stay short. I would like to see market keep going below. If I need to stay long, I will have to ensure that price stays above this spike base. I do not want price to come back below this spike base. So spike is basically last price probe uh, right before the closing. So that means we need to see whether price has gone enough high to cut the buying or not yet. If not yet, then price can continue to trade higher. It's a strong momentum in the market. The punters are, looking forward for new all-time high. We have Globix all-time high belt that has to be cleared out before any pullback, major pullback. So that is a plan for the today. If price start trading below this, we need to see whether price is finding a support in the point of control. If not, then if price start trading below 4661, then it's gonna go extreme down very fast to the downside because structure is very poor, right? And if it breaks this 4635, then we have the below structure to be repaired. Now, well, I think the best way of trading is not to be married with these levels. I think yesterday I was a little bit married to these poor structure levels that these needs to be filled, and I was trying to take some short positions. I took long positions as well, but I think I would have made great money if I was just trading breakout of overnight high and letting my trade run all the way to 64660. That was a level that we had previously marked. And now in the overnight session, market is consolidating. I really don't know what can happen. I'm seeing in the order book, the book is very thick. Although I've taken a short position in my another swing account from 89 level to see if we can have some sort of pullback today or market have some balance position. If not, then this is what is the target for the printers, right? So they want Christmas rally. Uh, what I'm gonna do, I'm gonna do some scouts based on the DOM so that you guys can see how the DOM happens. You see these guys are sitting here with the large limit orders. We need to see whether these gets filled in. If these gets filled in, that means somebody is seriously looking forward to buy this market. Or if they don't get filled, that means it's just a spoof. Uh, right? Spoof to show that yes, somebody wants to buy the market. Now, what we are seeing here, the cumulative volume data is quite positive. That means the longs are keep building their positions. Um, in the trading world, the best thing is basically where you have a fear. you buy that fear, because not many people will be able to do that. And beyond fear is only where you have to make money, but of course you have to have a risk in place. There is nothing high in the market, nothing high in this market, and nothing low in this market. What is most important is manage your risk. Now, looking at this dome, what I see basically some sellers are trying to participate here, but you look at the total sellers and total buyers, right? They are lined up to buy this market all the way to 77.75 at this point of time. That means if any drop happens, all these buyers will get the fill. So, and I don't see any sellers here at this point of time. We see very less sellers. And you see how aggressively buyers are trying to take positions. So this is a center line. This is a fight zone between buyers and sellers. And right now, sellers are trying to dominate. They're trying to go, but you see buyers are keep buying the shit because they are trying to buy the fear. So what I'm gonna do right now, see, you look at this profile. This is a profile, right? So this is a profile, very balanced profile. The prominent point of control is at 89.75, and this is the value area low. This is the value area high. We have a pool high that shows the exhaustion of buyers. If buyers were strong enough, they should have proved this and continue to go high, as normally they go right in the London session. They're not able to do it at this point of time. So pool high means these two letters UCCR, these are at exact reference levels. Exact. That means exhaustion. That could also mean that some sellers are trying to short here. So considering this is a double top for the overnight session and they take short position, they might be booking a profit here, or some people might be looking at a major pullback. So the in the balance profile, you can short somewhere here, you can book profit at the point of control, you can buy here, and you can book profit at the point of control, right? As I'm seeing, sellers are dominating here. Shorting here is like not a great idea because you're shorting at the fat of the profile, so that increases the risk, right? So now, considering we have a poor high, this could have some sort of pullback. So before we have a pullback, let me take a short position. Right. It's not a great location to short the market here, but what I mean to say, so let me try to take a short here. I need to change it now. So I get in fill, right? Now let me look to see whether the price can go to this level, where the buyers are sitting and they're waiting for a fill, right? I think this is the level. So that is what I'm going to target. We might see some sort of support in this zone. So it is a quick scalp for 2.75 points because that is the range that we have at this point of time. From risk versus reward perspective, it's not a great short to take because short should have been taken at the poor high or somewhere here. So my risk is more than the reward. right? But it's a high probability trade setup because I'm seeing seller's dominance. So I don't mind taking this risk, knowing that this trade might work in my favor, right? I don't know whether it is going to work or not, but there is a potential for it to work. Why? That I've explained because there is a poor hype, so buying has been exhausted, and market needs some sort of pullback to get new buyers on board. So let's watch it, right? Let's watch it. What happens? So what I'm seeing right now, I'm seeing there has been some large sell orders here, and they are not able to bring the price down, and I'm seeing some sellers are pulling their offers. So that's why I'm seeing this negative means sellers are pulling their offers. Some sellers want to exit from their positions, and buyers now start penetrating into the sellers area to buy their orders. So let's see. I'm seeing in the footprint the sell dominance is still there. We no need to exit from our position because most often what I've seen that when there are large uh, bids, the price often comes to those levels. So it might even go further lower as well. You see a lot of buyers are waiting for fill, right? So if somebody wants to buy this market, I mean, I don't know about all these buyers whether they're going to get fill or not, but at least I will be expecting these buyers to get in fill. So this is like a magnet, the large orders. So this is a liquidity, right? Market needs liquidity. Market moves towards liquidity. So if buyers are not showing not moving the liquidity to the upside, the market has to come down to take the liquidity, right? That's how it works. Now I have a provision to put a stop loss move towards my entry, but because this is a high probability trade setup, price might come back and take my stop and then still take this liquidity as I mentioned. So I really don't want to give my um, I don't want to caught into uh, taking my stop. So we are very close to hit this buy limit order. So now some mechanical traders, they are buying exactly at this level, right? G low. So they are trying to buy exactly at this level. But you look, I really need to see whether these guys they move their order or not. If they start moving their orders, then I need to quickly close my order. So they are still sitting here. They want this to fill. So let's see if they get the fill or not. Some front runners putting a little bit large size orders ahead of this liquidity. So they want to be filled. They want to sell to the other sellers. So these are the limit orders. Somebody putting a market order, and they are running ahead of these guys. So this is called front running. So these guys who are buying 124 contracts more than the sellers, they wanted this to buy ahead of these guys. This is how the business works, right? So some people think that we buy ahead of others, and we take advantage of it. So now some guys, they bought exactly at this reference level. They might have had a tight stop loss right below this level, so their risk was only a tick, right? And now they are selling on the way back some contracts to others. So they're not shorting. They bought here and now they are selling on the way back. We still stay with our trade. Now here we no need to panic because uh, price is going up, because price is random in nature, right? Um, we know that some front runners are trying to front run the bid ahead of this buying liquidity, but we might see some sellers reloading their sell positions here and bring the price again back down here, right? So let's watch it. So what buyers is trying to do, they want to eat this 51. So for that, what they need to do, they need to bring the price back here in this box. That's like taking their stops. Now what we are seeing here, some sellers are trapped in this bad location. 108 contracts has been sold off, and they got trapped at a bad location, which actually caused initiative buying. Sorry, responsive plus initiative buying, because these guys they shorted here, and then some momentum buyers they started piling up on top of them, and they drag the market up now. One mistake that we did, I mean, we should have, I should have put the profit here at this location, knowing that some buyers they can take a position with a very tight stop loss, put a stop loss a tick below this level, or two ticks, or three ticks, and then move the price back up. So that was another option. So maybe we could have traded both sides. Um, but let's see. I'm still sticking to my trade. See, this is what happens, right? These guys, they're patiently waiting to get filled, but some guys doing a front run ahead of these buy limit orders. They're putting market orders. They they saw this G low, they bought it, they put the market order, and as I mentioned in my previous video, market order is the one that moves the market. So this is market buy order, this is market sell order, right? So sellers put offer here, buyers bought right above them, and they push the market higher. Should I get into panic mode at this point of time? I don't think I should get into panic mode because we still have the sellers. Here we have poor high on top of that, and uh, I'm not really seeing a strong buying yet. The strong buying was only here, 124 buy, and rest all the orders are very small. All right. So what I can do, I might actually take one more sell position if price goes higher, and when I see sellers are trying to dominate, right? So this could be 215 level could be a good level to um, short, which is at 4591. So what I'm gonna do, I'm gonna put a sell limit order. The best thing for me to do is, okay, I put a sell limit order. So in that case, I will have two short positions. Uh, Considering that sellers will, um, what I'm seeing here now, you see negative means sellers are trying to pull their offers. So some people says don't add to your losing position, and some people says it is not about adding to losing position, but it is about risk management. Means you need to manage your risk. Means my risk remains this, and I can get a better. Uh, I'm not giving more risk. By doing so, I can have a better average price, and I still bet that price will go down. That is my bet, right? That is what I'm looking forward. Whether that happens or not, I don't know. So what I'm gonna do, I'm gonna have two buy stop orders here in case I get chop out. Also, I'm gonna have one more buy order right on top of it. So what might happen if I get stop out somewhere here on top of this? Then I would want my buy order to fill, and this is a balance for me right now, right? So there could be a spike to the upside where I can buy my long position automatically. So I don't want to short here. I would better wait for my fill if it comes here. Otherwise, I will let my this trade work for me because I don't want to chase seeing the price is going down. So I should start chasing them. I better take a strategic position here. So my risk is defined because if I start chasing here, the price start pushing up. What I'm gonna have? I'm gonna have a bad average short position, right? So that is what I should not do. So we got to wait patiently. Now what you see, what I'm seeing here, I'm seeing some large buy limit order being put in place to push the market up, and you see 130, 140. So buyers are being a little bit aggressive here. That shows the dominance from buyers. But you see here now 137 offers, 110 buyers. So if buyers needs to go up, they need to put more buy orders here. Sellers are pulling their offers. 120, 137. So they quickly need to buy right above it. Now we see sellers are okay. 134.29. So sellers are pulling their offers. The way price is going up. I think I should move my sell limit here, or maybe here. Why? Because these guys, they may want to fill this. I'm seeing sellers are pulling their offers. That way, at least I will have better average price, and my risk will be less. Right? My risk is gonna be less because I will have a better average fare if trade toss against me. So as we are seeing now, price is moving downward. Um, some aggressiveness coming from sellers. So now buyers have to defend again and put more market orders if they need to move the price up. So when we see these kind of boxes, empty boxes, right here, the empty boxes here, there is no buy market order. There is sell market orders. That shows the dominance of sellers. That means buyers pull their bids and sellers are becoming more aggressive. And now they're increasing. You see here minus minus means buyers are pulling their bids. Now they're getting nervous because sellers are dominating in their zone now. So let's see if we get the fill here. What I might do, I might pull the price below, and I need to move my stop loss as soon as it comes below. Then I move my stop loss here. So move my stop. Oh, shit. I put a three contracts. So put my stop here. You see how now there were some, so I got to fill here. Now you see there were buy orders here 500 something that was showing, but it was fake. It was spoof. So it was shown, but they when they saw the market coming down, they immediately removed their orders. So this is called spoofing because we don't see any 500 orders being buy limit orders being executed here. Yeah, so this is what we did now. So I hope you enjoy the video. This is another type of uh, a way of how to read the market through DOM and through the market profile. Thank you very much, guys. Enjoy your day.